What if I told you that a single cryptocurrency gained 244% in just 7 days, and most people still haven't heard of it? That token is Velvet, trading under the ticker Velvet, and according to KuCoin's official weekly crypto gainers report published on the 29th of June, 2026, it was the single best performing asset on that list, not by a small margin, but by a mile. The second place token, BEAT, gained 64% in the same period, extraordinary by almost any measure, yet Velvet nearly quadrupled it. On today, the 4th of July, 2026, traders across Bitget, KuCoin, and Binance are still actively discussing whether this rally has real substance behind it or whether it is the kind of vertical spike that evaporates as fast as it appeared. In this video, we are going to give you the clearest, most grounded analysis available, what Velvet is, why it surged, what the data says about where it goes next, and the honest answer to whether you should invest your money in it right now. Before you consider putting a single pound into any asset, you need to understand what you are actually buying. Velvet, ticker symbol Velvet, is a cryptocurrency operating within the broader digital asset and decentralized finance ecosystem. It is not a household name in the way Bitcoin or Ethereum are, but its recent price action has dragged it firmly into the mainstream conversation. What is particularly telling is the level of analytical interest it has generated beyond just speculative traders. Binance, one of the world's largest and most reputable crypto exchanges, has published a dedicated price prediction series for Velvet covering 2026, 2027, and projections stretching all the way to 2030. When an exchange the size of Binance invests the time to produce multi-year forecasts for a token, it signals that there is sufficient market interest and longevity to warrant serious coverage. Bitget similarly featured Velvet as a trending topic on the 28th of June, introducing it to an entirely new wave of retail traders who may not have encountered it previously. A 244% weekly gain does not happen by accident, and understanding the mechanics behind it is crucial before you make any decision. Several converging forces typically drive this kind of explosive altcoin move. The first is exchange-driven visibility. When a token begins appearing on trending lists on major platforms like Bitget and KuCoin, it creates a powerful self-reinforcing cycle. Traders spot the momentum, they buy in, the price rises further, which brings more attention, which brings more buyers. It is a feedback loop that can run remarkably fast in the crypto market. The second catalyst is broader market conditions. When Bitcoin and the major large-cap cryptocurrencies are relatively stable or in an uptrend, speculative capital rotates aggressively into smaller altcoins in search of outsized percentage returns. That rotation dynamic appears to be very much in play during this current period. Bitget's coverage of Velvet as a trending topic on the 28th of June was particularly significant. It was one of the earliest signals of the breakout, and traders who acted on it at that stage captured most of the 244% move. Let us get specific, because in investing, specifics matter far more than generalities. KuCoin's weekly crypto gainers report, dated the 29th of June, 2026, listed Velvet at the top with a gain of 244%. For context, the second-ranked asset on that same list, BEAT, gained 64%, which in traditional stock market terms would be a once-in-a-decade return for a blue-chip share, yet in crypto it was less than a third of what Velvet delivered. This kind of performance concentration, where one asset dramatically outpaces even other strong performers, is often a sign of a narrative-driven or momentum-driven move rather than one grounded purely in fundamental developments. That distinction matters enormously when you are thinking about what happens next. Assets that move on pure momentum tend to be highly sensitive to sentiment shifts. A single piece of negative news, a large holder cashing out, or simply the natural exhaustion of buyers can reverse weeks of gains within hours. Traders who entered Velvet early in that 7-day window achieved extraordinary returns. Those buying near the peak of the move face a very different risk profile. Velvet's surge is not happening in isolation, it is a sharp illustration of the current state of the entire altcoin market. With Bitcoin and Ethereum now operating as more mature, relatively lower volatility assets, a growing pool of speculative capital is actively hunting for the next high-conviction trade in smaller tokens. Velvet's 244% move in a single week is exactly the kind of outcome those traders are chasing. The consequence is that retail participation in tokens like Velvet is running high. You can see this in how quickly the story spread from KuCoin's gainers list to broader coverage on Bitget and into the analytical columns on Binance. High retail participation is a double-edged signal. On one hand, it confirms real demand and real buying pressure. On the other hand, retail-driven surges are historically less sustainable than institution-driven moves, because retail investors are quicker to panic sell when momentum stalls. It also raises a red flag that experienced traders know well. By the time a token is appearing on widely read trending lists, the most informed early buyers are often already looking for their exit. So where does Velvet go from here? This is the question every investor wants answered, and it is also the one that demands the most intellectual honesty. Binance has published a Velvet price prediction series covering 2026, 2027, and out to 2030. The fact that this analysis exists at all tells you that institutional-grade attention is now being paid to this token. In the immediate term, the key technical question is whether Velvet can consolidate its gains. After a 244% surge, consolidation, meaning the price holding above a meaningful support level rather than collapsing back to where it started, is the first healthy sign to look for. If the token retraces sharply and gives back the majority of those gains within days, it suggests the move was speculative and unsupported by fundamental adoption. If it holds and builds a base, it opens the possibility of a sustained second leg higher. As of the 4th of July, 2026, that consolidation test is precisely what the market is watching. Traders will be looking at volume data, order book depth, and on-chain activity to judge whether buyers are still engaged. No responsible analysis of Velvet is complete without a frank discussion of the risks, and there are several that are material. The first is pure volatility risk. A token capable of gaining 244% in a week is equally capable of losing that much in the same timeframe. Crypto markets do not observe standard trading hours, weekends, or bank holidays. A sharp move can happen at any point. The second is liquidity risk. Smaller altcoins frequently have thinner order books than major assets, which means a large sell order can move the price dramatically against remaining holders. Third is information asymmetry. Much of the narrative driving trending tokens is generated on social media and exchange marketing pages, where the incentives are not always aligned with your interests as an investor. Verify any claims you read about Velvet's technology or use case independently before acting on them. Fourth, and critically for UK-based investors, there is regulatory risk. The Financial Conduct Authority does not currently regulate most cryptocurrencies as financial investments, which means that if you lose money, whether through market moves, exchange failure, or fraud, you have very limited legal recourse. Only use platforms that are FCA registered for crypto asset services. Here is the straightforward answer. If you are an experienced crypto trader with a clearly defined risk management strategy, a small speculative position in Velvet, money you are genuinely prepared to lose in its entirety, may be a calculated risk worth evaluating, provided you research the project's underlying fundamentals rather than simply chasing the price chart. Set a strict stop loss before you enter, decide your exit target in advance, and stick to both. If you are a newer investor or someone who has not previously navigated high volatility altcoin trading, Velvet's current risk profile is extreme. The 244% weekly figure is arresting precisely because it is so unusual, and unusual gains in crypto are just as often followed by unusual losses. The classic principle applies: assets become news after they have already moved, which means you are rarely getting in early when you hear about them on trending lists. Dollar cost averaging over a period of weeks rather than committing a lump sum, and sizing your position to no more than a small fraction of your overall portfolio, are the minimum disciplines required if you choose to participate. Velvet has delivered one of the most remarkable performances in the crypto market this year, a 244% surge in 7 days, topping KuCoin's weekly gainers list and drawing analysis from exchanges as significant as Binance and Bitget. As of today, Saturday the 4th of July, 2026, it remains one of the most watched tokens in the altcoin space. Whether that momentum continues, consolidates, or reverses will depend on factors that no analyst can predict with certainty. What you can control is your own process. Research the project thoroughly, understand the risks completely, size your position appropriately, and never invest money that you cannot afford to lose entirely. Crypto can create genuine opportunities, but it rewards preparation and discipline far more reliably than it rewards impulse. If you found this analysis useful, please give the video a like and subscribe for more grounded, fact-based crypto coverage. And remember, nothing in this video constitutes financial advice. Always conduct your own research and consider speaking with a regulated financial advisor before making investment decisions.